Hi guys, this is Mr. Chauke. I'm a professional teacher of accounting. In this morning's lesson, we are going to do a balance sheet, combined balance sheet plus income statement, and also some couple of notes. And this is out of 100 marks, but we are going to make sure that we try to be as quick as possible. And I hope that as I do this with you, you will be able to understand. So here they're saying that the financial year of Molefe Bed ends on 30 June 2021. Very important information for us to be aware of. Our financial year is 30 June 2021, and our profit markup is 70% on cost, meaning that our selling price, it is out of 170, because 100 plus profit is equal to 170. So they're saying that 70% is added to the cost price for us to get the selling price, and we are required to do income statement, notes to the balance sheet, and the balance sheet. Now this is our answer sheet here. This is what we have. So I normally advise learners that always start with the information that is easily available to you. The first steps of doing this financial statements is that you must make sure that you start by entering the information that you have. So we're going to start by entering the information that deals with the income statement. So in the income statement, we are told that our sales is 8,500,000. So they've entered it for us. So I'm just going to highlight it to show that it has been used. Next, cost of sales is 5 million. So under cost of sales, we can start to type that 5 million. Okay, so we will type that 5 million here. I'm going to put it in brackets so that you guys can see. So that 5 million will come here. Remember, we need to adjust this information. So that 5 million, I'm going to put it in brackets. And then next, according to our information, we have our debtors allowance as 1 million as 128,400. So we are going to subtract it from here, because we know that debtors allowance at the end of the year must be subtracted to from sales. So we have closed it off. And the next, we have salaries for 789,700. It has already been entered, so we are just going to highlight it because it has been entered. And then next, we have water and electricity for 54,200. So water and electricity, they didn't enter it for us here, so we are going to enter it here. So the answer is 54,200. And then from there, we're going to move to the next one. We have fuel for 613,100. So if you check here, that 613,100 has already been recorded for us, so we are just going to highlight it. And then next, we have rates and taxes for 32,100. So let's see if that information has been entered. They have entered it, so I'm going to just highlight it. And then next, we have discount allowed for 14,600. So we are going to enter it under expenses. Remember, they did not record it here, so we have our discount allowed as the amount according to here is 14,600. So that 14,600 will come here. And then from there, we are going to go to our information. We have our discount received 19,800. So our discount received will be part of our operating income. So I'm going to put it here. Discount received 19,800. And then from there, we're going to have stationery for 4,200. Remember, stationery is an expense, so we're going to have it here under operating expenses. Stationery for 4,200. And then from there, we're going to go to our information. We have interest on overdue creditors. We know that interest on overdue creditors is part of our interest expense here. Remember, here we'll have operating profit. Here would have interest income, and then next we'll have a profit before interest income. Here we'll have profit before interest income here. And then next we would have our interest expense. So remember, you must know what does the note for interest expense include. Okay, so we'd have interest expense here. So by now we already have interest on overdue creditors of 1.4, so we have to enter it here. And then next we have insurance for 72,400, so I'm just going to write insurance here. Insurance, it's 72,000. Insurance is 72,400, so we'd have that 72,400 here. And then next we have bad debts for 20,000, so I'm going to include that bad debts here for 20,000. So we'd have bad debts for 20,000. And then next what we're going to have, we have income on deliveries for 1,200,000, so it's going to be part of our other operating income. So we have income on deliveries, and remember our answer is 1,200,000, so we have already entered it. And then next we have rent income for 82,200, so that rent income will come here. So we're going to have rent income for 82,200. And then once we are done with this, we would have what else do we have? We have interest on fixed deposit for 4.8, so this 4,800 will come on our interest income here. So that 4.8 will come here. So you need to start by entering the information that you have. So that 4.8 has already been entered. And then we have we also have advertising for 48,400, so that advertising will come here. So we have advertising for the answer is 48,400, so that 48,400 will come here. Okay, and then after this we would have interest on current account. If you look at it, it's on the credit side. So once interest on current account is on the credit side, it means that we have interest income. So that 3,000 it's how much, that 3,100 will come under our interest income here. Remember, we'll have that 3,000 under interest income. Oh sorry, here this 4.8 was not supposed to be entered here. It was supposed to be part of our interest income here. So we'd have 4,800 plus 3,100. Okay, and then from there we have bank charges for 8,900. So I'm going to have bank charges here, so we'll include bank charges for 8,900. And remember, since we have assets, we should also have what we call depreciation. Okay, so we don't know how much it will be for now. And then once you're done with this, then you can go to your information. You also look at your balance sheet section, and then you check what you have. Now if you look at our balance sheet section for the notes, remember, in our balance sheet, this activity requires you to do a combined activity. For trade and other receivables, we know we are going to have trade debtors, we are going to have income received, we are going to have accrued income here. So we're going to have accrued income, and then we're also going to need some prepaid expenses. So you write that here, and then you're going to check if maybe we have the opening balance for this from the trial balance for this thing. So if you look at this, okay, we'll come with it as we do it. Okay, but you need to know what you to include. These are the two notes that they want you to do here. Very important for you to make sure that you follow them correctly. So now here, if you check, we have our capital balance of 564,200. This is part of our this is part of what we are going to do on the face of the balance sheet. Remember, here we'll have fixed assets, and then we will have financial assets, and then we are also under the section we'll then have we are missing cash and cash equivalent, so we'll write it here, cash and cash equivalents. Okay, and then once you're done with this, or capital balance has already been entered, we know that under this we are going to have our loan, and then under this trade and other payables we would also have current portion on loan, but will be controlled by our information. So for now I won't enter it because I don't know if it's there or not. So let's start here. We have our capital balance. It has already been entered for us. We have drawings of 64,100. Remember, drawings must be subtracted from the capital balance. So here we're going to say minus 64,100, and then you are done with that. Next, we have land and buildings and all the things that have to do with the fixed assets. We will leave them for now because we are going to do the fixed asset note, but I will show you how to enter information because some of these things will be affected by the transactions. Okay, and then once we are done with that, the trading stock, for now we will leave it because we're going to get the trading stock from the trial balance. So next, we will have our debtors control. Debtors control will be part of trading other receivables. Remember, they said we must do it, so that 36,200 has already been entered for us, so we're not going to enter it again. Next, we have creditors control 86,200. Remember, we were not doing that note, so meaning you must enter it on the balance sheet, so it's going to be part of trading other payables here. So we'll take 86,200 here. Okay, and then from there we can highlight that it was used. Then after this we have bank. Remember, bank is favorable, so it's part of cash and cash equivalent. So under cash and cash equivalents here, we are going to do it in brackets. We are going to have 123,200, and then from there we are going to check what we have. We have petty cash for 2,000, so that 2,000 will be added to this, so we'll say plus 2,000 here, and then we'll also say plus so we also have something else, I think it's cash float. Then we also have the cash float for 4,000, so we'll also say that plus the 4,000. And then once we move on, we will then have, so remember this 4,000 has already been used. Then we have fixed deposit of 120,000. So remember, fixed deposit is a financial asset, so it will come here. This 120,000, we will work it out in brackets here. Okay, so by doing this, I already have marks because I've entered information that is available to me. So if you look at this loan, we will not enter it because we'll normally get a loan statement. So once we are done with this, we can then go to our adjustments and hear what they are saying. The first adjustment says that the water and electricity for June has been received, however it has not been paid. So meaning that we got the statement but the expense has not been paid, and we know that even expense has not been paid, it becomes accrued. So on the income statement on our water and electricity, we are going to say plus 4,300 because our water and electricity is accrued. So here we are going to say plus 4,300. But remember guys that this is an accrued expense, so it must also go to trade and other payables on the face of the balance sheet. So we are also going to come here and say plus 4,300. So this is how guys you record transaction number 1. Next, they're saying that a data M4 returned the bid on 29 June 2020 with a selling price of 8,500. Remember, the selling price is 8,500, right? And they're saying that a credit note was issued for 8.8, so meaning that the total that we gave him, it's 8.8. They say which includes 300 on delivery costs. So 300 is for delivery costs, 8.5 is for the bed that the person was buying. And here they're saying that no entries has been made, meaning that the transaction was not being recorded. So indirectly, they're telling you that you must record this transaction. So remember guys, when a debtor returns things for accounts affected, we would have our debtors control, we will have our debtors allowance, and then we'll have cost of sales and trading stock. So for now, let's start first with the debtors control with the selling price information. So remember this 8.5 is part of what is supposed to be subtracted on the income statement. So we're going to subtract that 8.5 on the income statement. Okay, so we're going to say here in our debtors allowance, we're going to say subtract 8.5. The reason why we subtract 8.5 is because we have a separate account for income for those deliveries. So that 3,000 will be subtracted here. So we'll subtract 300 here. Remember the 300 for the delivery fee. Okay, now we have dealt with this, but we must also go to our balance sheet and also show the effects of that transaction. So when we go there, we're going to say under trade debtors, we're going to say from this, remember, we're going to subtract 8.5, 8,500, and then we are also going to subtract the 300 for the transport because we gave that person a refund. Now when you do this, you must also think that cost of sales was affected, so you must show with the deal with the effects on cost of sales. So here we will do our trading stock record so that we can determine if there was a deficit or a surplus. So remember, according to our trial balance, our trading stock from the records is 1,224,000. So we're going to put that 1,224,000 here, and then we will look for the cost price. So we are going to need to add back whatever that was returned. So remember, our markup is 70. I think it's 70% from the information. So yes, that markup we have correctly applied it. So we're going to say 8,500 multiplied by 100 divide by 170, and then our answer here is 5,000. So meaning to our stock, we are adding back the stock of 5,000. Remember, if I return something to you, it comes back to you. Okay, and then here they're telling us that so this 5,000 we must subtract it from the cost of sales, because remember we said the stock was returned, so it means that cost of sales also has to go down. So we'd say minus that 5,000 also here. Now next we must check the effects of that on the trading stock deficit. So let's check here. So if we say 1,224,000, 1,224,000, and then we say plus 5,000, it is going to give us 1,229,000. So this is the stock that we would expect to get at the end of this. So it's giving you 1,229,000. So let's see if the next adjustment will say the same. Here they're saying that the flowing stock was on hand at the end of the financial year. So because the stock was on hand at the end of the financial year, it means this stock was not used. So it is on hand at the end of the financial year. So our trading stock is 1,220,000. Our stationery is 850. So to save time, what you do, you are going to go to your balance sheet and enter that under inventory note, because this is part of your inventory. So you're going to say 1,220,000, and then you say plus 850. Then you already get your marks on your inventory note. Then you go and show the effects on the income statement. Remember, our stock is actually very little. We're expecting to get 1,229,000, but we're getting 1,220,000. And remember, we must do the comparison. So we are going to have a trading stock deficit. In this case, it becomes a shortage. So, and on our income statement here, we're going to have a trading stock deficit. So I'm going to put it here. We're going to have trading stock deficit. So we will say I'm going to open the first bracket and then open another one. So I'll say 1,224,000 plus that 5,000 of the stock that was returned. Then I close my bracket. Then I'm going to say minus 1,220,000, and then I close the bracket. Okay. So let's see the answer that we are going to get. Remember, 1,229,000 minus 1,220,000. It is giving us 9,000. So we would have a trading stock deficit of 9,000. So that 9,000 will come here. Remember, when you do your calculation, you are going to say 1,229,000, then you say subtract 1,220,000, then it gives you that 9,000. So this will be about 5 marks on this transaction plus 2 on the balance sheet. So we are done with this. we have shown the effects everywhere. We have shown the effects on the balance sheet and also on the income statement. So you can, then we have to do the stationery on hand. Remember, our stationery on hand is 850. Once they say on hand, guys, it means it was not used. So on the income statement, whatever that is on hand, it is subtracted. So we have subtracted 850. We have also subtracted 1,220,000, and then from there we can go to the next transaction. Here they're saying included in the amount for insurance of 15,000 for the period 1 April 2022 31 March 2021. Now here, what is very important is for us to remember how many months were we supposed to pay for. Remember, we were supposed to pay for April, May, June. So out of 12 months, if you count from here to here, is 12 months. So out of 12 months, we were only supposed to pay for 3 months, but we actually paid for the entire 12 months. Okay, so it means that our insurance was prepaid by 9 months. So what we are going to do, we are going to say 15,000. We're going to say that 15,000. Maybe let me bring this calculator down so that you guys can see. We are going to say 15,000 multiplied by 9 divided by 12, because I want to see how much was prepaid. So it's 11,250. So remember, this is a prepaid expense because we are dealing with insurance. So under that insurance, we are going to minus that 11,250, and then we'll also have to add this to our notes under prepaid expense, which is 11,250. A transaction like this, guys, it's a common note. Okay, so we are done with this. And then next, for number E, they're telling us that rent has been received for 13 months. Once they say that rent has been received for 13 months, it already tells you that you need to subtract. Here they're saying that the rent has been received for 13 months. The rent was 6,000 per month before it increased by 600 on 1 January. So remember, we have already received the rent for 13 months. It means that the amount that is there should also includes the increase. So before the rent increased in January, it was 6,000, and then it increased by 600 in January. So meaning that it became 6,600. So it means that the rent that we have received in advance is 6,600. Okay, so we are going to go to our income statement, and then under rent income, we are going to say we're going to subtract. We will say minus 6,600, and then we'll go to our balance sheet. Remember, income received in advance is part of trade and other payables. So under trade and other payables, we're going to say 86,200. Then we're going to say plus 6,600, and then remember, we were also supposed to add the 4.3. I think I forgot to add it. Remember that 4.3 for here for the water and electricity, that was not paid, so it will come here. So it will be plus that 4.3 also for the water and electricity that was not paid. I nearly forgot it. So you must make sure, guys, that you work on your time. Remember, normally in the exam they won't give you a question like this because you guys have just started with accounting. Now next here, they are saying that depreciation is calculated as follows. On vehicles is 20% per annum on the cost price. On equipment is 15% per annum on the book value. And they're saying that a new vehicle was bought for 290,000 on the 1st of April and was properly recorded. So here, what I need to do, once they say it was properly recorded, it means the total includes the addition. So to save time, the first thing, remember, the vehicle is calculated 20% per annum on the cost price. To save time, I'm going to go to my fixed asset note. So this is the fixed asset note that we would have. Remember, they said here nothing will change, so we don't have to record anything here. So under vehicles, they said they bought a new vehicle for 290,000. So this is how you start any marks. Your 290,000 will come here, and then remember they said this addition has already been included or recorded. So it means that the total on vehicles that I'm seeing here for 890,000 includes the addition. So that 890,000 will come here. And the good thing here is that we don't sell our assets in grade 10. So you are at an advantage. So automatically it tells me that if I say 890,000, 890,000, then I say subtract 290,000, is going to give me my cost price at the beginning, which is 600,000. Then you already have scored a couple of marks here. Then from there, this is what we are going to check. Remember, depreciation must be for the old assets and the new one. So what we are going to do, we know that the cost price of our assets was 600,000. So maybe what we can do, I'm going to check the information about the percentage here. So remember, the cost price at the beginning for vehicles is around is 20%. So what I'm going to do, so we know that at the beginning we had a 600,000 value of assets. So what we're going to do, I'm going to just do the calculation here. Okay, I'll just write the answers here. So remember, guys, the depreciating rate is 20%. So I'm going to say 600,000 multiplied by 20 divided by 100, and then multiply by 12 divide by 12. It is giving me 120,000. So my first value for depreciation is 120,000. Maybe if we can try to increase our font so that you guys can see. So my first value is 120,000, right? Then remember, I bought a new one. The new one that I bought, it was for the new one that I bought, it was bought in April. So it's going to be April, May, June, and it is 290,000. So I'm going to say 290,000 multiply by 20 divided by 100, and then multiply by 3 divided by 12, because it was with us from April. Okay, let me just confirm the date. They said it was bought on April, so it's April, May, June, which is 3 months. Okay, so it means our answer here will be 14,500. So our answer here is plus 14,500. So I'm going to go to my balance sheet because I need to also earn marks on this. So remember, our depreciation for there, we can do it like this: 120,000 plus 14,500 will be our depreciation for the year for our vehicles. So it's going to be bracketed, remember. So it's going to be 134,500. So you already have marks for this 134,500. And then from there, guys, I'm going to go to my income statement also, so that I can earn marks under depreciation. I'm going to show that 120,000 plus 14,500, and then plus whatever that we're going to get on equipment. So now on equipment, remember, there was nothing new that was bought, so I can automatically get my carrying value. So on my equipment, remember, at cost at the beginning it was 240,000, so I can enter that information. My equipment, it was 240,000, and there was nothing that was bought, so meaning that I need to make sure that I record my information in that way. So the cost price at the beginning plus also the cost price at the end will be the same. Under addition, remember, here we would have 0 because they didn't buy anything, so our cost price at the end will be 240,000. And then when I calculate my depreciation, remember, they told me that they use carrying value method. So if I say 240,000, and here they've also given me accumulated depreciation at the beginning. So on vehicles at the beginning, accumulated depreciation is 120. So I can just put that in brackets just so that I can earn marks. So we have 120,000 here. Okay, now let's quickly get our carrying value. Maybe let's finish working on the vehicles first. So if I say 600,000 minus 120,000, I'm going to be left with 480,000. So my carrying value here will be 480,000. And then from there, my total accumulated depreciation at the end will be the sum of my depreciation at the beginning, plus my depreciation at the end. So let's check. If we say 120,000 plus 134,500, it is going to give us 254,500. So that 254,500 will come part of here. Then we can easily get our carrying value. So if we say 890,000 minus 254,500 is going to give us the carrying value. Okay, so 890,000 minus 254,500, it is giving us 635,500. So we're going to have our carrying value here as 635,500. Okay, then our answer here has been recorded, so we are good to go. Now what they mean here, where you see the totals here on the gray side, it means they want nothing, but here you're going to need it because you'll be doing the fixed asset note. Okay, so now let's check. Let's go to our equipment first and check what is given to us. So remember, on equipment we were also given the accumulated depreciation at the beginning, which is 66,600. So we're going to have that 66,600 here. So it is already we have entered it. Then we can just get the carrying value. So if we say 240,000 minus 66,600, we are going to get 173,400. So our carrying value is 173,400 according to our information. So by now you are already collecting marks from this. Okay, now we need to check what will be our depreciation. What will be our depreciation for the, remember we got the carrying value, and on diminishing balance method we calculate depreciation on the carrying value. So we are going to check the information about the rate. They said it's 15%, so we are going to say 173,400 multiplied by 15 divided by 100, and then multiply by 12 divided by 12, because this was with us for the entire year, and then the answer is 26,010. So we are going to enter that 26,010 here, but it will be in brackets. Okay, then when you've done this, guys, you are almost there with your answers. So remember, the answer is 26,010. So this 26,010, we must also transfer it to the income statement because we were required to also do it. So I'm going to where did I record the depreciation? I don't see where I recorded the depreciation. I just hope I didn't record somewhere by mistake. So that depreciation, remember guys, okay, I did not record it anywhere here, but remember our depreciation is going to be actually, I don't know if I recorded it or this software did not save. So for depreciation, remember we had 120,000 plus 14,500, and then we'll also plus 26,010. So this will be our total depreciation. So let's get the total for this. Okay, so 120,000 plus 14,500 and then plus 26,010. Our answer is 160,510, and this will have around 5 marks. So that 160,510 is our total depreciation for the year. So we did not record it anywhere. I don't know. Oh, I was doing it somewhere on the Wikings, but it's fine. We have already recorded it here, so it's not a train smash. Okay, so remember, we are going to go back to our fixed assets. Now when we go to our fixed assets, you are going to realize that our total depreciation, okay, here's not necessary because they've recorded everything. Okay, so now let's check something. What would be our total depreciation for equipment at the end of the year? We are going to say 66,600 plus 26,010, and then it is giving us 92,610. So that 92,610. 92,610 will be our total accumulated depreciation at the end of the year. So we'll need to get the carrying value. So if we say 240,000 minus 96,000, let me check something. So 66,600 plus 90, okay, plus 26,000. So it's giving us 92,610, and then I'm going to say these 240,000 minus 92,610, it is giving us a carrying value of 147,390. So our total carrying value is going to be 147,390. So to get the total the carrying value of our assets at the end of the year, we'll have to add these three items, and the total will have to be transferred to our fixed asset note. So I'm going to do it here. So I'm going to say 1,540,000 plus 635,500, and then plus 147,390. So it's giving us 2,322,890, but I'm going to verify 1,540,000 plus 635,500, and then plus 147,390. It is giving us 2,322,890. So we are going to put it on the face of the balance sheet. Remember, it is supposed to come here under fixed assets, 2,322,000 let me check how much was the answer. 2,322,890. Then we are done with the fixed asset. Now, if you look at the marking guideline for this, our fixed asset note is 16 marks. It's a lot, guys, for an exam. So you must make sure that you work out your things correctly. Then we are done with this. We are also done with number G. Then we can go to the next transaction. The next transaction says that the loan statement received from Debit Bank reflected the following: balance on 1 July, repayments during the year. Okay, so we know that when it's like this, we get the loan statement, we must check is interest capitalized or not. Next, they're saying interest on loan is capitalized, and then 84,000 will be paid back to Debit Bank in the next financial year, including interest. So now here, what we need to do, we need to check what is the interest. Remember, I said you're going to use bottom up. This repayments means minus. So you're going to start from here, your closing balance. So we're going to say, remember, the closing balance is going to be, when you calculate your interest, you're going to say, but please make sure you show your workings somewhere at the bottom of your answer sheet so that your teacher can see how you calculated it. So you're going to say 420,000 plus 96,000, and then we're going to subtract 480,000. Then it's going to give us the interest. So our interest, according to here, is 36,000. This 36,000 must be recorded in the income statement under interest expense. So it will be 1.4 and then plus 36,000. But remember, I said you must show your workings in brackets. Okay, maybe what you can say, you can show it in bracket like this. You will say open two brackets, just so that you don't get a wrong answer. Okay, so I'm going to put a bracket here, another bracket here, and then once I say plus, whatever that I'm going to working out, I'm going to put it in bracket. So remember, it's 420,000, 420,000, then plus 96,000, and then we subtract 480,000. So whatever that you're going to do here, then you close the bracket. Whatever that you're going to do here will give you the total for those two items. So remember, maybe let me show you what I mean. So remember, it's 1.4 plus then I open my bracket, 420,000 plus 96,000, and then I minus 480,000, and then I close my bracket. Then it's going to give me a worked out answer of 37,400, and I'm going to put it in bracket here, 37,400. Okay, so remember there are marks for showing the workings, so you must show those workings. So now, next, they told us that 84,000 will be paid in the next financial year, meaning that in the next 12 months. So what we must do, we must make sure that we separate our loan. So we need to have short-term loan and long-term loan. Remember this one, the one that would be paid in the next 12 months must be taken out of the long-term loan. So we are going to do it like that. So in our balance sheet, we are going to say on our loan, we are going to say 420,000 minus 84,000, and it is going to give us the answer that will remain. Now guys, let's check what is the answer that you're going to get. So if we say 420,000 minus 84,000, we are going to be left with 336,000. So meaning that our long-term loan will be 336,000. So I'm going to put it here and then put it on the total here at the top of the box to show that our non-current liabilities is 336,000. Okay, then from there, remember this, we are not saying that this has been paid, so we must move it from long-term liabilities to short-term. So it's going to come here as current portion on loan. So we'd have current portion on loan, or you can write short-term loan. So remember that 84,000 will come here. Then just so that we can end marks, we can automatically add this to, because we are done with that part. So if we say 101,600 and then we say plus 84,000, how much are we going to get? We are getting 101,600 plus 84,000. We are getting 101,600 plus 84,000. We're getting 185,600. So you would have 185,600 here. Then we know that we already got the marks for these. But remember, for trade and other payables, it seems I don't know why, but it seems my answers are disappearing. So if you remember, for trade and other payables here, for this 86,000, for trade and other payables here, I had added, I remember adding, we had something like 4.3 for water and electricity, and we also added 6,600. I don't know why. It seems the software is not saving, guys, so it's going to be a challenge. And I'll also have to remember what else was written there. And yeah, I think those are the things that were supposed to be there. But if there's anything else, we will check what will be the difference. But remember, on your video, we are going to see all of this. Okay, so they've given us the total, so we'll be able to see what could be the thing that causes the difference if it doesn't add up to the total. Okay, now from there, what else are we left with? We need to check our information. So next, they're saying here that interest on fixed deposit is still outstanding. There were no changes in the fixed deposit account during the financial year. So when it's like this, guys, you go to your fixed deposit and check what is the rate and percentage. So our fixed deposit is 120,000. So if we say 120,000 multiply by 8 divided by 100, it will tell us how many, what was the interest that we're supposed to get. So we were supposed to get 9.6. So how much did we get on fixed deposit? We got 4.8. So if we say 9.6 minus 4.8, it is going to give us 4.8. So we are owed, we have an accrued income. So under trade and other receivables on the notes, our accrued income 4.8. Remember, our accrued income is it's going to be 4.8. And then also under prepaid expense, remember we had that 11,250 here. The software is not saving my answers, so it's going to be a problem, but I'll try to see if it will not have any effect. Okay, so remember, so that 4.8 must also be recorded in the income statement under our interest income. So interest income, remember, is going to be 4.8 plus 3.1, then plus 4.8. Okay, then I think we'll be done with this part. Let's check other adjustments. Next, they're saying that a fixed deposit of 35,000 matures on 30 September. So because they're saying that it matures on 30 September, it means that if you count, our end of the year is 30 June. So 30 September is within the next 3 months. So it falls within the next 12 months. So remember, if our fixed deposit will mature within the next 12 months, we have to take it out from the long-term fixed deposit to short-term fixed deposit, which is under cash and cash equivalent. So we're going to go there on the face of the balance sheet and do it there, because we are not doing the note here. So remember our financial assets, we had something like 120,000, if I remember well. So it's 120,000. Okay, so we're going to say that 120,000, we're going to say 120,000 minus that 35,000 that is maturing, and then we are going to bring it here under cash and cash equivalent, would say plus 35,000 here. Okay, then from there, what we need to do, let's just finalize this fixed deposit. 120,000 minus 35,000, it is giving us 85,000. So that 85,000 will come here, and then already, as you can see here, we almost have the total of our fixed assets, non-current assets. So we can just edit now. So 2,322,890 plus 85,000, it is giving us 2,407,000, 2,407, 2,407,000 890. So you see, this is how, guys, you can quickly earn marks. You must make sure that you capitalize these methods that I'm giving you. Even if you don't finish, you know you have some marks that side also. Now the last okay, the next adjustment says a debtor Pilidoba's account of 3,200 must be written off as recoverable. We know that once we write off someone as a bad debt, it means that we are taking them out also out of the debtor's control. So although our bad debts are increasing by 3,200, our debtors are decreasing. So under bad debts here, we're going to say plus 3,200, and then under trade and other receivables, we are going to subtract that 3,200 because this person will no longer be our debt. Okay, and then next we can go to the next adjustment. Next, they're saying that a creditor with a debit balance, very important for us to remember the type of balance. This person has a debit balance. It means it's the creditor's control has got a debit balance. The same must be transferred to the debtor's ledger. Now, at the moment, my creditor's control it has got a debit balance. When I move off this person out of the account, it means it is, if it is a, remember, debt leak, your liabilities increase on the credit side and decrease on the debit side. So it means it's a minus at this point. So we have creditors control. Our creditors control here, it means I'm going to show you something. So we have creditors control. It is debit debtors control at the moment. Okay, I mean debit creditors control. Creditors control at the moment, meaning that the balance, when we look at it technically, it is minus 4.5. This is how the balance of the person is. So now they're saying we need to take this person off out of this creators control. So if we take him off, in order for us to be able to take that person off, because it has a debit balance, for us to remove him, it means we must credit creditors control. And the sign says creditors control increases on the credit side. It means we are going to add. Okay, so when you go to our trade and other payables, we're going to say plus 4.5. I'm just going to go there now. So I'm going to come here and say plus 4,500 here. Now remember, we credited creditors control, so double entry says one account debited, one account credited. So we credited creditors control, then it means we must debit debtors control. So when we debit debtors control, it means that we are adding. So we are going to go to our notes here and say we are going to come here, and firstly remember that guy must be written off, the one who has a debtor. So it was supposed to be minus also 3,200, and then would say plus that 4,500. So you must remember, guys, unfortunately my software doesn't save answers. I don't know why, but at least we have this in the record. Okay, so we have done that. So what we need to do now is to check if our information balances. So let's close off the totals of the nodes, because this is what we can deal with for now. So I'm going to try and close this off and see if it gives us the correct total. So let's see. If we say 36,200, then we say minus 8,500 minus 300, and then minus 3,200, and then plus 4.5. It is going to give us 28,700. So I'll have that 28,700 here. And then next, our accrued income, it was only this 4.8, so I'll put 4.8 here as a total. Now let's check. Our prepaid expense remains 11,250, so that 11,250 will come here, and then we get the total. So let's see, if we say 28,700 plus 4.8 and then plus 11,250, we are getting 44,750 as a total. I'm going to put it here, 44,750. And then the very same total for 44,750, I'm going to put it under trade and other receivables here as 44,750. And then we can also close off our inventory node, guys. Okay, so we're going to say 1,220,000 plus 850. It is giving us 1,220,000, 1,220,850. Then I can also close off my cash and cash equivalent. So let's see how this will work out. So we are going to say 123,200 plus 2,000, and then plus 4,000, and then plus 35,000. The answer that we are getting is 164,200. So the answer will come here, 164,200. And then once we are done with this, we can do the total of these three. This black box means that these items must be added, so we're going to add them. 120,850 plus 44,750, and then plus 164,200. It is giving us 1,429,800. So we're going to have 1,429,800 here, and then from there, guys, we can get the total of our non-current and current assets, and we get the total. So let's get it. So if we say 2,407,890, and then we say plus 1,429,800, what is the amount that we're going to get? We're getting 3,837,000. So I'll put it here, 3,837,000 3,837,000 690. So remember, this should be the same as our total assets, but what we are going to do, I'm going to put it here for now, that answer, because it should be the same. Okay, so it's how much I'm going to 8,837,000 3,837,000 3,837,690. So you can see that already we have earned some marks on the balance sheet, even though we are not done. We are just left with the equity note. You see, this is how you can quickly finish. And remember, this is out of 100 marks. So you'll probably write this for around 2 hours. So now, because we can't complete equity without income statement, we need to go there and finalize our income statement. Okay, so I'm going to go there just now. So already we have 16 marks, we have 8 marks. It's a lot you are collecting. There's no you will fail. You just need to be safe, you need 40 out of 100. So for now, let's see what we have here. We need to start with the small things. So remember, here, there's 5,000. We were supposed to subtract 5,000, remember, of the return bed. I calculated it. I don't know, the software did not save it here, so we were supposed to minus that 5,000, if you remember. And then here on 82,200, we said we will subtract 6.6, so we'll minus 6,600. Okay, and then on the fee income, remember, the income on deliveries, we had said that it seems this thing did not save my answers. We said that we will subtract, we will minus the 300. I had written this. I don't know why these items are not saved. I think maybe there's a problem with the software. Maybe because I'm recording for a very long time, so it did not save all the adjustments that I made. And then remember, on insurance, we said we will subtract 11,250. And then on bad debts, we said it's going to be plus, I think, 3,200. So don't worry about that. And then on advertising, it had no effect. Let me see. On water and electricity, it was accrued by 4,300. So we said we will add 4.3. So those answers were not saved. I don't know why, but as long as you understand what I'm saying. So now everything else, I think it's fine here. So we just need to update our information. So I'm going to do it like that. So let's see here, guys. And remember, for you in the examination, the good thing, you won't be using software, so your answers will always be saved. So here we're going to say 8,500,000, and then we say subtract 128,400, and then we also say minus 8.5, and then the answer that we got is 8,363,100. So we're going to have 8,363,100. So this is the answer that we got, but I would like to verify. So 8,500,000, then we say minus 128,400, and then we also subtract 8,500. Our answer 8,363,100. And then our cost of sales 5 million 5 million minus 5,000 is going to be let me see, 5 million. We minus the 5,000 of the return bed, we are getting 4,995,000. 4,995,000. Okay, it's 0, 0. So the answer will be bracketed, and then from there, when we check for the gross profit, how much are we going to get? So if we say 8,363,100, Then we say subtract 4,995,000. We are getting 3,368,100. So we'd have 3,368,100. And then from there, our discount received did not change, so it still remained 19,800. So we'd have 19,800 here. Our fee income delivery, let's see how much it will change. If we say 1,200,000 and then we say subtract 300, it's going to be 1,199,000. 1,199,700. And then our rent income 82,200 minus 6.6, it is giving us 75,600. So our answer here will be 75,600. And then we are going to add all these other operating incomes. So we're going to say 19,800 plus 1,199,700, and then also plus 75,600. It is giving us 1,295,100. So let's verify again. 19,800 plus 1,199,700 plus 75,600. We are getting 1,295,100. And then also this answer plus 3,368,100 will give us 4,663,200. So 4,663,200. Okay, let's verify. 3,368,100 plus 1,295,100. It is giving us 4,663,200. So we are good to go. Then from there, we need to look at our operating expenses and get the total. Remember, it must be bracketed. So now remember, discount allowed did not change. The things that did not change, we would have to take them as they are. I'm just going to close this brackets to show that these things have been finalized, and then we need to check if there were any other adjustments that maybe the answers were not saved for. But I think for now everything is properly updated. Yeah, it seems everything is fine. Our interest incomes, yes, everything is fine. So discount allowed, remember, it's going to remain 14,600. okay, so let's get our water and electricity. So 54,200 plus 4.3, it is giving us 58,500. So we'd have that 58,500 here. And then next 4.2 subtract 850, it is giving us 3,350. So we'd have that 3,350, and then 72,400 minus 11,250, it is giving us 61,150. And then 20,000 plus 3.2 is going to be 23,200. And then advertising will remain as 48,400, and then bank charges will remain as 8,900 because nothing changed. And then from now, all we have to do to get this correct, we need to add all our operating expenses. Okay, so we're going to start 789,700 plus 789,700 plus 613,100 plus 32,100, and then also plus 58,500 plus 14,600, and then plus 3,350 plus 61,150, and then plus 23,200 plus 48,400, and then plus 8,900 plus 160,510, and then plus 9,000. The answer is 1,822,510. So our answer would be 1,822,510. So when we check our, let's check our operating profit, how much it will be. So if we say 4,663,200, 4,663,200, then we say minus 1,822,510. It is going to give us 2,840,690. So let's see. 2,840,690. So I'll just put it here. Okay, I think we need to just check if everything here is fine. Okay, because if everything is wrong there, we're going to have a problem. So 8,500,000 minus 128,400 minus 8.5, we are getting 8,363,100. and then let's check our cost of sales. So 5 million minus 5,000, 4,995,000. So it's fine. So 8,363,100 minus 4,995,000. Okay, 3,368,100. So it's fine. And then let's check 19,800 plus 1,199,700, and then plus 75,600. So it still gives us 1,295,100 plus 3,368,100. It still gives us 4,663,200. If we take this answer and say minus 1,822,510, it is going to give us 2,840,690. So everything is fine. So let's add our what do you call it, interest income. So if we say 4,800 plus 3.1 and then plus 4.8, it is giving us 12,700. So our interest income will be 12,700. So let's see here. If we say 2,840,690 plus 12,700, it is going to give us 2,853,000. Okay, so I'm going to put it here, 2,853,000 390. Then okay, so 2,853,390, and then if we subtract this answer minus 37,400, it is giving us 2,815,000. So our net profit is 2,815,990. So guys, if there's any error that I make here, remember 100 marks is a lot for a person to teach within a short period of time. So this net profit here, I'm going to add it to my capital note here. So it will be this minus this, and then under this would say plus 2,815,990, and then it will give us the total that we need. So let's see, if we say 564,200, 564,200, and then we say minus 64,100, and then plus 2,815,990. How much are we going to get? We're getting 3,316,090. So we'd have 3,316,090. So now our total assets should be equals to equity and all the liabilities. So our equity is 3,316,090. So we're going to take it and say plus long-term assets is long-term liabilities, which is 336,000, and then we are also going to add it with our short-term liabilities, which is 185,600. So the total between the two is the same. You see, 837,690. So guys, I covered 100 marks with you. I showed you how to do income statement, balance sheet, trade and other receivables, and also the fixed asset note. So guys, I'm really taking efforts for you to make sure that you guys have a better understanding of accounting. All that you can do for me is to make sure that you share this lesson with a friend, share with your classmates, watch together, guys, have discussions on the things that I showed you here online, because it really takes time. I made this lesson around 4 a.m. just for you, so you can just imagine the efforts that I put for you guys. So all that I'm requesting for you guys to do is to make sure that you pass accounting. Accounting is really close to my heart. Okay, now with that out of the way, if you want me to become your personal tutor, I can definitely make sure that I tutor you online at an arranged fee, and then we'll take it from there. With that out of the way, guys, thank you so much for watching. May God bless you. Don't forget to share this lesson with your friends and loved ones. Let's make accounting to be fashionable and lovable. I love you so much. Have a blessed day. Shalom.